In an eagerly anticipated report, the Bureau of Labor Statistics delivered what many economists and policymakers have been yearning for: a broad cooling of inflation pressures across the United States. The data, released on Thursday, provided the strongest signal yet that the Federal Reserve can pivot from its aggressive rate-hiking campaign and begin lowering interest rates, likely as soon as September. The so-called Core Consumer Price Index, which excludes the volatile food and energy components, rose a mere 0.1% in June from the previous month, the smallest increase in 3 years. This deceleration was driven primarily by a long-awaited slowdown in housing costs, a sector that has been a stubborn source of inflationary pressure throughout the pandemic. Shelter prices, the largest component within the services sector, climbed just 0.2%, the most modest gain since August 2021. Owner's equivalent rent, a closely watched metric that accounts for the costs of homeownership, rose 0.3%, also the slowest pace in 3 years. These figures suggest that the lagging effects of the Fed's rate hikes are finally materializing in the housing market, offering relief to millions of American households grappling with soaring rents and mortgage payments. Probably the most significant aspect of the June report is the downshift in housing inflation, remarked Julia Coronado, the founder of Macro Policy Perspectives LLC and a former Fed economist. It looks broad-based and durable, and numerous Fed officials have indicated a downshift would boost their confidence that inflation is indeed returning to 2% in a sustainable way. The broader services sector also exhibited signs of cooling, with airfares, hotel stays, and inpatient hospital care all declining from the previous month. Meanwhile, the costs of new and used vehicles led decreases in the core goods basket, providing further evidence that the disinflationary forces unleashed by the Fed's policy actions are gaining traction. For Fed Chair Jerome Powell and his colleagues, the June inflation report will undoubtedly be a welcome development, validating their resolute stance on taming price pressures. Powell, who earlier this week described the May CPI data as really good, will likely find the June figures even more encouraging, bolstering the case for a potential rate cut as early as September. We are sufficiently confident, even if the Fed is not yet ready to admit they are, that inflation is on the way back to the 2% target, said Joseph Bruswalis, chief economist at RSM US LLP. The road is now open to a rate cut by the Federal Reserve in September. In the wake of the report, financial markets swiftly repriced their expectations, with traders now fully pricing in rate cuts in September and December. Odds of a third cut in November, which would come just after the presidential election, also surged to better than even, a scenario that was largely discounted before Thursday. The cooling inflation data also provided a much-needed boost for President Joe Biden, who has faced intense scrutiny over the administration's handling of the economy. In a statement, the embattled president cheered the progress, stating that the figures show significant progress in the fight against inflation. While the June report was undoubtedly a positive development, challenges remain on the horizon. Recurring jobless claims remain elevated, hovering near the highest level since late 2021, though first-time filings fell sharply last week, providing a glimmer of hope for the labor market's resilience. Furthermore, the report noted that the new vehicle price index was estimated using fewer data points due to a cyber attack that disrupted dealership software systems in June. The Bureau of Labor Statistics cautioned that it is monitoring the situation closely, underscoring the potential for revisions as data flows normalize. As the Fed prepares for its next policy meeting later this month, all eyes will be on Powell's highly anticipated speech on Monday, where he is expected to provide further clarity on the central bank's policy trajectory. While the June inflation data may have tipped the scales toward rate cuts, the path forward remains uncertain, with policymakers treading carefully to ensure a soft landing for the economy. In the meantime, consumers and businesses alike can take solace in the knowledge that the inflationary pressures that have plagued the nation for over a year now appear to be abating. The road ahead may be winding, but the destination, a return to price stability, seems increasingly within reach.